Hello traders, this will be just a quick market update from the team here at Parallax. So there has been a lot of talk lately about the equity markets. We just had our second quarter of GDP shrinkage here in the United States, and that's gotten people talking about possible recession and of course recession fears and how that might affect the markets moving forward. Well, here at Parallax, we don't like to chase the news. We much prefer to let the chart and the price action do the talking. We are big fans of the Elliott wave principle, and we believe without a doubt that the Elliott wave principle is the best tool, not just for trading, but also for forecasting market moves. So for those of you who are familiar with the Elliott wave principle, here is our higher time frame wave count. We believe we started out with a series of unfolding 1-2-1-2s, and back in the beginning of this year, we completed the intermediate degree wave 3. So let's dive down a time frame and take a closer look. So on the 4-hour chart, we have a clear correction, A, flat B, and wave C to complete intermediate degree wave 4. It's at those moments, these possible turning points, is when Elliott wave really shines, because at this point there is a lot of uncertainty. Are we going to bounce in equities? Are we starting a new wave count to the upside? Well, using the wave principle and technical analysis and looking for clues on the chart, we can begin to build a case, either a bearish case or a bullish case. So let's take a quick look at what evidence is on the chart for us to find. First off, we have what we can reasonably consider to be a completed correction. Corrections are always 3 wave moves, and in this case, we have 1, wave A, 2, wave B, wave C. In that lower degree wave C, we can count 5 waves, 1, 2, 3, 4, 5. And of course, after a completed correction, ABC correction, what do we expect? Well, we expect another impulse. So that is the first piece of evidence for a new set of impulsive waves to the upside in the S&P. We can also look at the more recent bullish price action. We have here what we think to be a wave 1, 2, and a developing wave 3. Well, why do we think that's a developing wave 3? Couldn't it be a correction in and of itself, or a WXY, an ABC, something like that? It could, and it's still possible that perhaps in the future we will change our wave count. But what does the evidence tell us? Well, first off, we see that we have a break of what's called the base channel. And if you're unfamiliar with the channeling technique, it is our most popular video here on the Parallax channel, so please go and watch that. I guarantee you'll learn something valuable and can add to your trading. The channeling technique is excellent, not just for Elliott wave counting, but for market forecasting in general. So I would highly encourage you to go watch that video here on the channel. So corrective price action almost always stays contained, reasonably contained within parallel lines. And if we draw a parallel channel here, we see that back in 28th of July, we broke above the top barrier of this parallel channel. That is an additional piece of evidence that we are starting a new impulsive cycle, not a corrective cycle. If this was just a corrective bounce, we would expect to see some heavy resistance in this area, but instead price broke right through it quite easily and now is maintained a level above the upper boundary of this parallel channel. So that is another piece of evidence we can put into the bullish column. Also, again, for those of us familiar with Elliott wave, we like to see certain specific Fibonacci extension levels in our trading. So let's take a look here. We're quite close to the 1.618 extension of wave 1. And that is a perfect spot for wave 3. Haven't quite reached it yet. However, we have breached the 1-to-1 level. That comes in right here. Another key characteristic of corrective price action is equality. So again, if this move here was just a corrective bounce, we would have expected prices to struggle in that same area. If anything, we have a nice bit of confluence here. The upper boundary of the parallel channel combined with the one-to-one wave equality level. So given that price action didn't struggle at all really here at this level, that's another good reason to believe that we are starting a new impulsive sequence to the upside and not experiencing just a corrective bounce. So if we continue to look aside from the wave principle for just a second, we can see a support turned resistance zone here. Prices bounce, let's say 1, 2, 3, 4, 5, a handful of times in this area here, and price is in this level now. So this would be a very important level to watch in the S&P, around 410 to 420 or so. And for those of you, again, who know Elliott wave, we can move our stop loss here. If this is in fact a wave 3, then the next corrective wave, which would be wave 4 cannot enter the price territory of wave 1. That is one of the rules of the wave principle. There are only a handful of rules and then a handful of guidelines. And one of the rules is a corrective wave 4 cannot enter the price territory of wave 1. And that provides us with a lot of valuable information, because if we watch price struggle here, where it has before, and we get a corrective move that moves past this red line here, this invalidation level, then we know that this bullish interpretation is incorrect. We would have to go back to the drawing board. Perhaps it would be a 1-2, 1-2, or maybe in fact it does turn out to be an ABC, and this larger sequence is something like a WXY. Still possible. However, given the evidence that we currently see today on the chart, we favor the bullish count. So if you'd like to learn more about our particular style of trading, how we like to utilize the Elliott wave principle, and how, or exactly why we believe it to be the absolute best forecasting and technical analysis tool, please check out our other videos. Also, join our Discord. We have a free community, an awesome group of traders, and we are constantly discussing equities and forex and crypto, and we discuss trade ideas, and we improve each other's trading as a group. And it's an excellent spot if you are looking to learn more about the markets and trading. So we hope to see you in there soon. But that's all for today. All right, happy trading.